Hey, welcome back to my channel. This is Struzyna with the Gunderman Group coming with another market update. Really excited to bring this one to you because I found some really interesting data. There was an Inman article, and for those of you that don't know what Inman is, it's a real estate news publication that talks about industry-related news. And I was reading a couple of articles. As they put out a series recently called Bubble Trouble, and this one in particular caught my eye because it was 4 stats that will give you something to worry about, and 4 stats that'll give you some hope. And I'll link to that article down below and you can check it out. But I wanted to talk about at a high level what I learned in that article and then what I'm seeing on the ground and share some anecdotes with you in this local market. I know you're gonna get some value out of this video, and when you do, give the video a thumbs up and subscribe to the channel because I'm gonna continue to put out weekly content like this and you're not gonna wanna miss a minute. So without any further ado, let's just get into this thing. So the Inman article, like I said, had 4 different stats, 4 that were positive, 4 that were negative. With the sort of negative ones, one thing that I thought was interesting is they led with the number of licensed realtors. It was 1.48 million licensed realtors in the United States right now. That is more than in recorded history going back to like 1910. And that's only significant right now because the last time we saw numbers in a trend line in the uptick direction like this is in 05 and 06, and it really peaked out in 08. And we all know what happened at that time. Obviously, the number of licensed realtors has absolutely nothing to do with the market itself going up, down, or sideways, but it is an indication of sort of the general public and sort of something to pay attention to. In general, what it means though is there's a lot of competition at a time when there is not a lot of listings. There's not a lot of inventory historically happening right now. So it's just something to be aware of, and just because there are so many licensees doesn't necessarily mean anything relative to the health or lack thereof of the market, but it's something to be aware of when you're going out and shopping. But what is really important is lumber, materials, cost to build things. We've seen a ton of videos out here on the price of lumber and the tariffs and why the import and all of the import taxes and all that sort of stuff are affecting it. But also the supply was taken down just at the moment when it actually needed to go up. And so that's really causing a huge shortage and therefore the price going up significantly. I was talking to an architect who I work with a lot and refer to a lot here in the East Bay. His name is Joe, and Joe was telling me the other day that he's working on 8 different projects right now in Alameda specifically, where he focuses. And he was kind of describing the cost structure of kind of getting a project started. Just a simple couple 100 square foot addition, something to build brand new on the back of somebody's house or on a second level or whatever. He's saying the engineering drawings have almost doubled. He used to get those for somewhere in the $5,000 range. He's now paying as much as $9,000 to $10,000 for the same set of drawings. Additionally, the permit costs here in Alameda, he said, have doubled, plus the amount of time it's taking. Since COVID, it's literally doubled, is what he said. His fees have gone up something in the world of 20%. And then he was talking about lumber specifically and how the cost of lumber, not only just to get it into the United States, a lot of lumber comes, the big beams and stuff come from the Pacific Northwest or Canada, and just the cost of shipping it down here has gone up substantially. And so what he was estimating is to build an ADU, build an addition, do something where you're actually building something from the ground up. Someone is going to spend somewhere in the ballpark of $20,000 to $25,000 for paper, meaning permits, engineering, architectural drawings, all of that stuff before they even dig a hole or pound a nail into something. So that cost has gone up significantly. And that is important because when you're looking at the price of homes right now, and this is a narrative, and I think this explains it a little bit, the price of homes has obviously gone up quite significantly. And when you look at someone who's got a little 2-bed 1-bath or a 2-bed 2-bath and they want to have a bigger yard or they want to expand it, and you look at the cost of that construction, you're talking about $500-600 a foot to get something nice. You might be able to do it for $400 a foot, $450 a foot if you don't go with really high-end finishes or do some of the work yourself. But just because it's going to cost you so much to like get the paper for it, that cost has gone up pretty significantly. And so what I think is happening is people are doing a cost benefit analysis and deciding, hey, for the amount of money I'm about to sink in to get an office, a Zoom room, a third bedroom, whatever it is, a couple hundred square feet, I could just take that money and go put a down payment on another house and get something bigger that's already there and it's done, and I don't have to waste another 6 to 12 months and headache and live in a construction zone and all that crazy stuff. And so I think that has added to the value, to the premium of something that fits your needs today, right now, as opposed to something you can build and spend 6 to 12 months building, but is going to upset your life for quite a lot of time. So that is super important. I think it's really worth considering. So real quick, additionally, the other component here is the labor shortage. The skilled labor for construction, for building things, all that stuff. The US Census Bureau has estimated that it's gone down pretty significantly in COVID, and it is trending back up, but because there's such a lack of labor, such a premium on materials, contracting, building, all of that sort of stuff has definitely slowed down and taken a backseat and gotten more expensive. So I believe that for what's already built, that's why there's such a premium for it today as well. Now, a couple of other things that I think are maybe more on the positive side that they talked about. Over a third of Americans have been fully vaccinated, and I think something like half have had at least one dose at this point, something in that as of this recording. And so that's obviously bringing a lot of positivity into the marketplace. People are starting to get out and about and kind of come out of their COVID little hole and try to figure out what the next step is in life. And I think that you're going to see some general enthusiasm into the economy as open houses come back, as opportunities to travel come back, all that kind of stuff. So I think that is going to continue to lift the economy and push it in the right direction. And that's what I keep reading and keep hearing a lot of people talk about. On a national basis, one thing that is interesting is spending by builders that are creating residential spaces has actually gone up pretty significantly. And I think part of that is probably due to some of the inflated prices we talked about earlier for labor and materials. But I also think, based on what I'm reading from the US Commerce Department, is pushing the new construction back into a really good place. Again, I think some of that might be a little artificial given how expensive materials and labor are, but people are responding to the demand. People are building and constructing. However, of course, that takes time. That is not something that it can happen overnight. And I think that, at least in the short term, that's why you're seeing such a premium on the existing houses as opposed to adding or building or whatever, which takes a number of years in some cases. Now, the last stat that I think is really interesting that they brought up is the National Association of Realtors is projecting by the end of 2021, we should see a total of 6.22 million units sold in the year. That's significant because it's 10.3% higher than what we saw in 2020. Interesting. But the conversation is being had around how there's no inventory, very light inventory, etc. Here's what I think is happening. Yes, at any one time, there is a light amount of inventory. There's not as many units on the market as at any one time, on any one given day or any one week as there used to be. A great example of this is here in Alameda specifically. You would see, on average, prior to COVID, anywhere around 50, 55 units, sometimes as many 60, 65. On a low end, it was in the 40s on any one week. You'd go out on broker's tour, you'd see something in that world as available, right? Since COVID, it's shrunk down. Obviously, at the height of the pandemic, it was down under 10 in many cases. Granted, this is not a very big geography, but Oakland was similar. It was cut in half. There were less than 200 units on the market at any one time in Oakland at one point. Ridiculous. However, what I'm seeing happening is the sales times have shrunk significantly. The 2 week sales cycle that we used to have, where you'd come on a Wednesday, open house, broker's tour, the next week an open house, and then you'd take offers, shrank pretty significantly. So now you're seeing, something comes on a Wednesday, posts an offer date for the following Thursday. It's on for 8 days, maybe it's on for 7, maybe you get a preemptive and it's on for 4 days, right? So where I'm going with this is the turnover has happened faster. The days on market have gone down on average. And what you're seeing is not necessarily less inventory, but just less available inventory that is sitting for longer. So the perception is there's less inventory, but what I think is happening is things are turning over faster, and so the new stuff is turning over faster. It's not languishing on the market. So you look at a snapshot of any 1 week, and it's less units available. But you look at the macro level and you're actually seeing a pretty high volume of transactions happening. And I think that that's what this estimate is suggesting. I'm looking at personally investing in a couple of cities, Cleveland and Pittsburgh are two that I'm focusing on. And that's a story that I'm hearing in those markets as well, is that stuff is just turning over in the matter of 3-4 days, sometimes 1 day. If it sits on for a week, that is sometimes taking a long time to sell, which wasn't the case before. It was 14, 21, as many as 30 days in some of these markets or more, depending on the price point. And that's really being condensed. So you're just having this turnover effect. And as a result of that, the perception is that there's not a lot of inventory. But when you actually look at all the numbers, you're seeing actually a good amount of turnover in inventory. And as the National Association of Realtors is suggesting, you're actually going to see 10% more transactions this year than you did last year. It's fair that last year was half out the window because of COVID, but nonetheless, you see where we're going with this. Hopefully you got some value out of that, and if you did, give the video a thumbs up and subscribe to the channel, because I'm going to continue to put out market updates and real estate related content just like this, and you're not going to want to miss it. So without any further ado, my name is Struzyna with the Gunderman Group. Thanks for checking out the video, and I hope to see you on the next one.